Welcome to the Real P&L Trading Show, where I share my real P&L on 3 accounts and share my proprietary SafeWheel options trade system for free. And let's get into that. Well, you can see my account here. This is my Earnings Edge account. Here's the net lick. Let's see if I can get that on there. 10,891. It's the same as last week because this week, last week I didn't have any trades and nothing qualified there. Make sure you guys say, let me know that the audio is good. Thank you, Devin. You can hear me okay. I changed my audio a little bit. Make sure that it works okay. Okay, so what do we have here for the 10,891? And what's SPY trading? It went down pretty good last week. 546.11. Let's look at the spreadsheet here. Let's change this. This is 546.11. And what was that number again? 10,891. And 891. Okay, on the Earnings Edge, you can see that I have 30 wins, 20 losses, 8 break-evens, 60% win rate. Average win around $700. Average loss around 580. So my winners are outpacing my losers, but not by a lot, by 60% here. But the amount of money that I'm making actually exceeds the amount that I lose per trade. So that's, I'm winning on both accounts there. You have the 2022 account where I did 63%, where the market was down 20, 2023, 17 versus 24, underperformed there. And now it looks like we're just about, 14%, 15%. So we're pretty even this year, in 2024, with the Earnings Edge compared to the S&P 500. However, there's more risk with the Earnings Edge compared to being long the S&P 500. But that risk comes with some reward here, as you can see. Since I started trading this system and showing my results live every week, it's up 118% since 2022. And the market is up around 15%. So vastly outperforming there with the Earnings Edge. And like I said before, there weren't anything significantly coming into earnings that fit through the filters. Usually when there's a lot of earnings coming out, I get quite a few stocks that fit through the filters, and there's a lot to choose from. And sometimes the picking is slim, and that's what happened last week. So there wasn't really anything that qualified for me to trade with the Earnings Edge. And I'm not going to just trade to be trading. I'm going to trade because I have a higher probability to win. All right, let's take a look at my this account here, which is my Premier Level 5 S&P variant. I'm just going to hit the refresh button and see where it is. 3105. So let's put that in there. And I'll talk about the Premier Level 5 a little bit. It's a Premier Level 5 Pro. 3105. 3105. So it did come down a little bit. Whenever there's that first leg down, typically the Premier Level 5 Pro will come down with the market. But then as the market goes sideways or continues to go down or goes back up, it recovers much faster than the market itself. And you can see how I started just in the middle of July, and you can see that I'm outperforming the market by 3% already with the Premier Level 5 S&P variant. Okay, and yeah, so I showed that. Any questions about that, let me know for sure. I'm actually going to, coming up here next week, I'm going to do an information session on the new PL5 Pro trading plan and the trade structure. And it's going to be an interesting event, which I'm going to most likely open the doors. Haven't opened the doors for the PL5 or the PL5 Pro since January. So I'm going to let some students in. I can only handle so many students at a time. Okay, so that's the PL5 Pro. I don't know why this is doing this. There you go. Let's talk about the SafeWheel. So SafeWheel, get the account this one in the account. Safe wheel account. Let me make sure I get into the right one. I believe it's this one here. 61, 6, 121. 6, 121. Also it's down. So you can see I'm down this year, okay, on the safe wheel. So it's underperforming compared to the S&P. You see I outperformed in 2022, underperformed in 2023, but still outperforming the S&P about 22.5% versus 15. But I get about half the drawdowns, right? So it's a better risk-adjusted system compared to the S&P. Even though the returns might be relatively close, the risks are lower compared, and that's based on back test and forward test, where my drawdowns are about half of what the S&P 500 is. So you can see the results, overall results there, still outperforming there. Should continue to outperform. Let's talk about that, the account. Here, what happened last week? So I was assigned at 29.50, 100 shares, and then I added another tier, right? So I added to my position because that's the way the system is. I will add 200 shares. I won't add 300. And I sold the $27 put and got assigned. So now I own 200 shares. All right, which is fine. And I also have my put hedge and my long call here, so my puts. So let's talk about the puts first. Now I own 200 shares. So the question for this put is, because I own 200 shares, I have 3 questions about this put hedge. Number one, because I own 200 shares, did this pay off? And the answer is no. It hasn't paid off, right? It's $21 put, a little far down there, pretty far away from $29.50 and $27 where I got assigned. And it's not actually paying off in terms of outperforming my long 200 shares. So I'm down $73 here, up $7 here. So it's not outperforming there. So the answer is no. So I'm not going to cash in on this put hedge. Second question is it 100 days or less? The answer is no. If it was, I would move it. And then the other question is it close enough to the actual price? So we're $25.69. Is $21 within 70% of $25.70? And the answer is yes. I don't really need to run the numbers. I already know that it is. So I'm within 70%. So this put hedge is fine. Now I have my long call. It's a 28.50 long call. And that's what I bought on Friday. That's fine. That's doing fine there. That's to protect this put hedge. Now, what do I do next? I'm long 200 shares. I want to sell a covered call at the 29.50. Right. So let's see. Can I sell a covered call? Because I got assigned at 29.50 for 100 of my shares. So I'm going to go into the nearest expiration. I'm going to look at 29.50 and see that there's no premium. 1 cent. And this is a bad tick right here. Now I look at my next level of $27. Can I sell something worth 26 cents or more, 25, 26, 7 cents or more? No, I cannot. So I can't sell any premium. So like ABC, always be selling, always be closing, always be getting premium, right? I always want to sell premium. That's the goal of this system. I want to always be selling premium. So guess what? I think Will said, will we be doing a Blaze of Glory trade this week? And the answer is yes, we are going to do a Blaze of Glory. Okay. So what can happen is I could get called away from all my shares, and I could actually lose money on the actual shares themselves, which is a possibility. And that is part of the Blaze of Glory trade that I recently added to the rules, because I want to be selling premium. The old rule would be to just get out and start over. But why should I do that when I've got premium? I can take premium on my way out. Now, so the next question is, now that I know it's going to be a Blaze of Glory trade, what do I do? I look at the highest extrinsic value, and I can see my extrinsic value here is around 35, 36 cents, and my extrinsic value here is around 35, 36 cents too. So I could either go with the $26 dollar call or the 25.50. I'm going to go with the 26 because it's further out of the money. And so if I get called away, I can collect another 30 cents, even though it's kind of technically already in here. But I'm going to go ahead and sell a little bit out of the money here. Let's see. Oh, my extrinsic value may be a little bit higher here. So I'm looking at when I try to gauge the extrinsic value, what I'm looking at is the out of the monies. Because when you look at the out of the monies, that's all extrinsic value, right? So I could go with this, the 25.50 or the 26. It can go either way. This extrinsic may be a little bit higher, so I'll go with the 25.50. So I'm going to sell not one of these, but two, and why two? Because I own 200 shares. So I'm going to go with two. The mid's 59, so I might be able to collect, 120 bucks or so, close to that on my way out of here. And maybe I get called away, and maybe I don't. But it is the Blaze of Glory trade. I'm collecting premium on my way out of this position. I'm going to get out of it more than likely because I own 200 shares. Let's see what happened here. Got my working order. It's not filling, so I'm going to get it to fill. Collect that $100 and something there. Okay, so I filled and I collected a nice bunch of premium there, but I'm going to get to keep this premium, but I might get called away from my shares at a loss. That's right, at a loss. I might get called away at a loss, but that's okay. That's part of the system. And if I get called away, then I just start over again. And I'll probably have to roll this. Next week, I'll have to roll this out anyways. Now, also part of this trade plan is to own, go long, 2 long calls, because I'm sacrificing here. I have 200 shares that I am not going to make money on now, anywhere past the 25.50 range. And what if this thing just shoots up like crazy? I want to be long 2 of these. So I'm going to go ahead and buy another call for $5. See what I can get over here. At 27.50, it looks like. That expires at the end of the week. I'm probably going to have to pay $6 on one of those, just to give me some more protection. More protection for my put hedge, because now my protection went away at 25.50, right? It went away. So I'm long 200 shares, so I want to mimic that. So I've got 2 of these now. Okay, so there it is, the trade for the safe wheel. You guys see me trading this account live. And let's see if there's any questions or comments today. Good morning. Good morning, Devin. How you doing? And thanks for telling me my audio is first. And my audio is good. And Shovel says first. How's it going, Mr. Shovel? Mr. Shovel is in the PL5 trade again. Yeah, I think it's a great time to be in the PL5, or actually now it's the PL5 Pro, because I updated the trade plan and made it even better. And Will says, are we doing a Blaze of Glory? Yes, we are. Yep. Avery says, don't forget to hit that like button. Please do hit that like button. I appreciate that very much. Kevin, good morning. And yes, that's what I meant. Will, always be collecting. ABC. I forgot to say I forgot the word collecting. ABC, always be collecting. Avery says, be mindful of wash sales. I'd say once called away, choose a new stock. Yeah, good idea there for tax purposes. I might choose a different stock if I get called away. I thought the rule was no long calls because of put hedge. No, that's why I have the long calls, to protect the put hedge, right? Or you mean because of long shares? Yeah, so I did have long shares, but now my long shares are dead at 25.50, right? So they are no longer long shares, because at 25.50 they do not become long shares anymore. So I want to protect my put hedge, so I added another call. I could get away with maybe one long call here. I don't necessarily need two, but I made that part of the rule set, so I'm just going to follow the rules there. It could be one way or the other. If you decide not to buy another long call here, if you didn't want to do that, that would be fine too. Mobilla says, do you close the put hedge on Friday or Monday? Let me think about that. If I know I'm going to get called away, I will on Friday. If I know for sure I'm going to get called away, I'll close that thing on Friday, knowing that I don't want to carry it over the weekend. Because if I do that, then I'll want to buy another long call. But see, because of the wash rule, I'm probably not going to get back into JD right away. So Friday would be more ideal if I know I can. If I know I don't need it, it'd be more ideal to get rid of it on Friday, not hold it over the weekend. Okay. Foruck, just subscribed to you yesterday. How about that? I know your viewers are advanced users, but I'm just a Forex trader that's interested in your guidance. Any particular path you recommend? Yes. So if you go through the path that I went, which was first I was trying to buy stocks and make money, and then I was trying to buy options and go long options, but I realized that was a low probability situation. Then I realized selling premium was the way to go. But then but the problem with that is you're not hedged. So now we're in the level 5, what I call it, is where I'm selling option premium, but I'm also hedged. So you want to be thinking along those lines. So anything that you want to do along those lines, or think about that. There's a lot of stuff on my channel about that. So yeah, you can go there. I also just wrote a book. I really didn't want to talk about it too much right now because I don't want to get people confused. But if you go hit the link in the description, you can read one of my books. That would help you. Will, wonder what you think of going deeper in the money for the Blaze of Glory. On the risk graph, it looks more delta neutral and protective if it drops. Well, I mean, it is guaranteed. But see, I want to get as much extrinsic value as possible. That's my goal pretty much all the time. Always be collecting. So when I'm collecting, I want to get the most extrinsic value as possible because those are the options that pay me the most. If I go deeper in the money, yes, I will collect more premium and it'll be almost a guarantee that I'm going to get called away. So then it goes back to, well, how much extrinsic value did you collect on your way out? Because it's all going to kind of, the more extrinsic value you collect, the better off you're going to be, basically. Even if you go deeper in the money, you're going to get less extrinsic value. So you'd be what I would consider worse off. Okay, Steve-O, need the long calls because if the stock shoots up to 60, your put hedge would lose big time. Yes, correct. Exactly. You never know what could happen. Takeover bids, I've seen stocks go from, $20 to $50. They get a takeover bid and they just shoot up, and it's nice to have those long calls. It's happened a few times where those long calls have paid off and the put hedge lost a lot, but the long calls paid off more than the put hedge lost. I'm always hedged. I like the hedge, by the way, in case you guys haven't noticed that. Honey Badger, hello, Carl. Have a great day and hope to see more from you in the future. Yeah, good to see you. I'm glad you're here. Okay. Before I head off, let's see if there's any more comments. I know that I like to tell you guys, put your comment in early because get towards the end of the broadcast like I am now, and sometimes people try to put comments in and I don't get to those because I think we're on maybe a 5-second delay, something like that. So one thing is, though, I am, as you can see at the bottom of the screen, don't forget that I am doing an information session on my PL5 Pro coming up next, not tomorrow, Tuesday, but a week from Tuesday. And you should join, check that out, see what I do with 70% of my net worth. What am I doing with that? And I'll show you what I'm doing with it. So, in parting, what I'll say is, if the P&L is not real, what else are they trying to conceal? I'll be back next week